Business credit is not rocket science. It's literally just a series of steps, but there's absolutely nobody teaching this anymore. I'm making this video because I see a huge gap in the marketplace. When I was coming up, there were multiple mentors teaching various ways to actually access funding, make money online, and actually transform your life in the pursuit of financial freedom. But today, those mentors are gone. Like if I told you right now that the way to make $1 million selling anything on the internet is by building a funnel, and you don't know what a funnel is, it's because nobody's teaching it anymore. Now our feed is full of people teaching digital products, communities, etc. But what they're not teaching you is that the product is successful because it's a key component of that person's entire funnel. And that product has an entire infrastructure of service behind it. And that's actually what makes the millions of dollars. But this video isn't about funnels. It's about business funding, where we see the exact same problem. We have a bunch of gurus today who didn't actually pay the cost to learn from the gurus that came before them. Now everyone is preaching the same message because it's the simplest approach and that's all that they know. Today, I'm going to teach you what I know for absolutely free. This information needs to be back in the hands of the people because we're stronger together. We're going to do a deep dive into multiple ways you can build business credit. And I'm going to set a target that I believe is attainable for anybody watching this. The target is 100K. After watching this video, I don't care if you're a farmer or a ballerina, you will be equipped with the knowledge and tools to secure your first $100,000. I don't have anything to sell you in this video. I'm making this video simply to raise awareness about these funding strategies that are starting to get lost in time. You might need to watch this video multiple times because some of the stuff I'm talking about is pretty high level. But for the sake of simplicity, I'm going to break business credit down into two categories. First, we're going to talk about personal guarantees, where you use your good credit history as a springboard for your business. And then we're going to talk about what I specialize in, which is the world of no PG funding. This is where you use your business's credit history and financial health to secure funding. This side is only for the real ones. It requires building from scratch and having a lot of discipline, but it's also the best payoff and gives you access to your absolute maximum funding capacity if you do it correctly. And then we're going to talk about what happens when you merge the two together. When you build a business that has a credit profile that can stand on its own, and then you come and you co-sign with your business. So now you have two strong entities working together. That's how you unlock the millions in funding rounds. And we're going to talk about all of that. So let's get started. First up, we have personal guarantees. This is probably stuff that you already know because it's been regurgitated to death. It should be no surprise to you that if you have a 680 credit score, you can walk into any bank and open a new account. And when you do that, they will soft pull your credit profile. And when the bank does that, they're focused more on the data points in your credit profile more than your credit score. When you look at data points, these data points are set by federal guidelines that they have to follow. These are the exact things that they're looking for if you're looking to get approved for $100,000. So the first thing that they're legally required to check is your payment history. And this is exactly how they break it down. So first is your collections. A collection is when the creditor turns over your debt to a collection agency when it's left unpaid. For this, they want to see zero, absolutely zero collections on your credit report. So if you're doing credit repair, that's one of the areas you want to focus on first. Pretty much no good borrowers have any collections listed on their credit report. If you need help figuring out how to get these items disputed off of your credit report, check out my other videos where I talk about the Section 609 dispute letter. That's the exact type of letter you want to use when disputing items like collections on your credit report. Next, they check your derogatory public records. A public record is a legal record reported on you that's available to the public. For this, the most common thing they're looking for is bankruptcy. So obviously you want to have zero of these listed on your credit report as well in order for you to get approved for 100,000 or more. The next thing that they're looking for is late payments, and they break this down into three categories. So there's your late payments that are 30 days or more, and then they look for late payments 30 days or more within the past year, and then they compare that to late payments 30 days or more all the years before that. So basically they're looking to see if you've been paying late if you pay late this year, and how much this year have you been paying late versus the years before that. The data point that they're looking for this is zero. They want to see zero late payments 30 days or more, zero late payments 30 days or more within the last year, and even zero late payments 30 days or more the year before that. And then next, they also look at late payments, but this one's for 60 days late. This one isn't broken down into categories. It's just 60 days late. How many 60-day late payments do you have, period, on your report? And this one, they also want to see zero. So that means zero collections, zero derogatory public records, zero late payments 30 days or more, zero late payments 60 days or more, zero late payments 30 days or more last year as well. After that, they look at the time since your most recent late payment. How long has it been since you made a late payment? And for that, they're looking for 4 years. They want you to be at least 4 years removed from your last late payment in order to get approved for $100,000 or more. And the last thing in your payment history that they're looking for is your accounts that are always paid on as agreed. That they want to see 100%. All of the accounts that you've ever opened, they want to see that you've paid them all as agreed. After your payment history, the next thing that they consider is your amount of debt. These are the data points that they're looking for when they look at your amount of debt that you have. First, they look at your accounts with balances. They want to see 3 to 4 accounts maximum with balances carrying on them. That means accounts that you use money on but haven't paid off yet. And then it's your utilization. They want to see 6% maximum when it comes to your utilization rate. And lastly, it's your total balances. Everyone's situation is a little different, especially if you're a business owner. But if you're just using your personal credit only and nothing else to try to get approved for 100K, then most people in that scenario have less than 2,700 in total amount owed all across the board. And once they get those data points, then they're moving on to your credit history. And that just breaks down into 2 things: the age of your oldest account and the average age of all of your accounts. So obviously the longer the better for both of these items. But you need to understand that the people in this country that have the absolute best credit scores, right, are boomers, the people that are really old. So for those people, their oldest age of accounts look like 26, 30 years, and their average age of accounts like 10 years or more. If you're not a boomer, you might not even be 26 years old. Don't worry, the banks are really only looking for 7 years. So they want your oldest account to be 7 years old, and they want your average age of accounts to be around 4 years. The last 2 data points that the banks are looking for aren't extremely important when it comes to getting you approved or denied, but you should still know about them. So these data points are your new credit and your credit mix. For new credit, they're just looking for how recently was it that you opened a new credit account. For this one, they're looking for at least 3 years. And then they're looking at your number of recent inquiries. How recently have you tried to open a new account? And for that, they want to see 0 over the past 12 months. That's why it's so important when credit stacking to go to different banks that pull from different bureaus so that your inquiries stay 0 as much as possible. And then there's your credit mix. This is the different types of credit accounts that you have. This is not as important as your late payments, total amount owed, or your credit history, but still I'm going to give you this information because it's completely free. Now first, it's credit cards. Banks like to see that you have at least 6 active, healthy credit cards holding a decent balance on them. And then there's your revolving accounts. Banks want to see that you have 9 to 10 revolving accounts. And then finally is your installment loans, including your mortgage. Banks want to see no more than 5 installment loans listed on your credit report. When you have all of these data points that I just mentioned, you can walk into any bank and get approved for $100,000 using absolutely nothing but your personal credit. No documents, no W-2s, no tax returns, nothing. All you need is your personal credit and yourself with all of these data points, and you will get approved for $100,000. And that's the full, complete checklist for free. This is exactly what the banks are legally required to look for in order to lend you $100,000 or more. And the last part is what none of the gurus will ever tell you. All of this is contingent on your income. Getting approved is one thing, but even when you're approved, banks take into account your capacity and debt to income ratio when determining how much you can actually get approved for. Basically, if you don't make a lot of money, then why would you need a high limit credit card? They have algorithms that predetermine your cost of living based on your location, age, and occupation. All of that gets taken into account when you personally guarantee any type of business credit product. Now let's consider the world of no PG. On this side, we never ever personally guarantee anything. We make sure to never provide our social security number unless absolutely mandatory. This approach is not complicated, It's just a series of steps. However, most entrepreneurs skip this because it requires patience, purpose, and passion. Also, you should know that this is absolutely not going to work if your goal is to just acquire business credit for the sake of having it. This only works if you actually use the credit to launch or scale a business. It starts with setting up a foundation that makes your business fundable in the first place. You'll need to have all of your paperwork in order. You need your business properly registered. You need to go get your EIN for free from the IRS because that's going to be how you build credit in your business's name, separate from your personal social security number. We'll talk about that when we break down the steps to get 100K in just a little bit. I'm not talking about net 30s. I'm talking about real money that gets deposited into your business bank account that you can do whatever you want with. But it will take a series of graduations. And where you start is with a net 30s and trade lines. After you have your LLC and EIN, you need a DUNS number from Dun & Bradstreet. DNB is the oldest institution for business credit recommendation out there. The other two you should know about are Experian Business and Equifax Business. These are the business credit bureaus. They track your business's credit history and financial health, just like the personal credit bureaus that you're used to. So starting from scratch, your path to 100K would look something like this. When you register your business, the first thing you should do is also create business bank accounts. Open 5 to 8 merchant accounts with vendors that report to the business credit bureaus. So for example, if you were starting a restaurant, you would go open 2 to 3 business checking accounts, and then you want to open accounts with your meat vendor, your equipment vendors, your food vendors, your cleaning supplies vendors, and etc. This is where you build a foundation of credibility because your payment history with these vendors is going to be part of your business's public record. And remember, the most important factors are late payments, total amount owed, and the age of your accounts. You need to actively use these vendors for your business and hopefully be generating revenue that is being deposited into your business bank account. Even if you haven't quite figured out your audience yet and you're not making money, still make sure that you're making regular deposits into your business bank account, especially in the beginning. That's when it's the most important. When you do that, you do have to be careful not to be using money from your job or your paycheck because you might end up paying double taxes if you do it that way. Remember, you're building your business's public record. You need to realize that those first 3 months of business are extremely important because everybody is watching you. All of the algorithms see your activity and they see your accounts, and they're all competing to see who can sell you a product first. So the second you hit certain milestones, you start to notice more offers coming in the mail and in your email inbox. It's important that you graduate your business credit profile in this specific way that I'm going to tell you, because skipping tiers can end up forcing you to personally guarantee, which ruins all of the good work that we've done so far. After 30 days, the first level of business credit you should graduate to is gas cards and fleet cards. All they're looking for is an established paydex score and 30 days of positive business credit history. After 60 days, you'll probably already start getting offers in your business email. But if not, you can approach your payment processor for $10,000 to $20,000 with no personal guarantee. All they care about is 60 days of consistent transaction history. And some popular payment processors are PayPal, Stripe, and Square. If you're watching this right now and you've already done this step, you've already been approved by PayPal, Stripe, or other payment processors for $10,000 to $20,000 based solely on your transaction history, then go ahead and drop a comment giving your experience so other people will know it's possible and they know what to expect. But in today's world, there are so many alternatives and they all work the same. I always recommend Gumroad because you'll never have to deal with freezes or any of that regular PayPal, Stripe issues. By month 3, your business credit profile should start to look more and more mature. And that's the beauty of this process. Personal credit takes years to build, but business credit can be built in a matter of months if done properly and intentionally. As we continue to build out the credit mix in the business credit profile, the next step is to secure a business credit card with absolutely no personal guarantee. You're going to use only the bank statements from your business checking account. Now, there's a bunch of providers you can go to all over the internet and get a corporate credit card, but my favorite one is Ramp. The process is straightforward and there's no personal guarantee or personal credit check. You just use the money in your business checking account as the backing for the credit line that they give you. The amount that you get approved for depends on your business's cash flow. Everyone's situation is different. So just as a recap, we're only 3 months in, and so far, you have a properly structured LLC and EIN. You have positive activity with all 3 business credit bureaus. You started building relationships and getting to know your vendors that are the lifeblood of your business. You have gas and fleet cards, and you also have a $20,000 line from Gumroad, PayPal, or whoever it is you use as a payment processor. And finally, you secured a corporate credit card using only your EIN and the balance of your business checking account. So you can see that we're not even at our $100,000 play yet, and we've already built real value in our business structure. Once your business credit cards start reporting, you can finally graduate to pledge loans and stated income loans. These are the products that are offered by banks. So whoever it is you bank with, you want to ask what products that they offer where you can use the money in your business checking account to secure a revolving line of credit in your business's name. Once you get one revolving line of credit, you can now open up the world of hard money lenders and no-doc lenders all over the world for your business. Now let's talk about what you're actually going to need to apply for 100K using your EIN only. The first thing is you need a properly structured LLC and EIN. Then you're going to need a DUNS number that shows positive activity with at least 5 accounts that are at least 3 months old. You're going to need a business bank account with at least 20% of what you're trying to get approved for in it. So if you're trying to get 100K, you're going to need $20,000 in your business bank account. You're also going to need at least one previous installment loan. You want this previous loan to also be at least 20% of what you're trying to get approved for. So ideally, you want a $20,000 installment loan on your business credit profile already before trying to apply for $100,000 in funding. The last thing you need is what we just got, which is one revolving line of credit. Also, you want that to be at least $20,000. One quick hack that nobody will tell you is that if you have an auto loan in your personal name, you can transfer that loan into your LLC's name and 2 things will happen. One, your personal profile will show that the loan, say $70,000, is going to be paid off. Second, your LLC will now have a primary installment loan of $70,000, which will help open you up to a multiple of that in potential funding down the line. The main thing to remember is that none of this will work unless you actually use these funds to start a business that you are passionate about. Because this funding strategy doesn't require a personal guarantee, it's not going to be 0%. The way these institutions make their money is by lending to people like us. So it's important to have a business plan and understand exactly how your cash flow is going to pay the business's loans off on its own. That's how you build a truly sustainable business. Now, the last thing I want to talk about is something no one else is going to tell you. There's a third world of funding where you combine your personal credit and your business credit profiles together. This is how you unlock your absolute maximum funding capacity. I'm talking millions of dollars. For example, the SBA can send you up to $5 million in 24 hours through their 7A loan program. When you approach big banks like Chase, Bank of America, American Express, and any SBA certified lender, you should know that they are not looking at your FICO score and they are not looking at your business credit score either. There's a whole different type of scoring called the SBSS score. It's the FICO Liquid Credit Small Business Scoring Service. This is a special credit score that's used to assess the credit worthiness of small businesses, particularly when you apply for major loans of $500,000 or more. This is because you got to think about where the money is coming from. Most loans that are really large, like 500K and up, are usually backed by the government. But in the business world, that's the SBA. So most lenders don't take that type of risk on their own. They're backed by the SBA, and therefore they have to follow the SBA's guidelines. So unlike traditional credit scores, the SBSS considers both the businesses and the business owner's credit history, as well as other factors like your assets, liabilities, cash flow, and the business's age. A higher SBSS score signifies a lower risk for lenders, potentially leading to better loan terms and easier access to financing. The score ranges from 0 to 300. The SBA recommends a score of 155, but some lenders are even stricter and they require a 180 SBSS score to get approved for those larger business funding products. So I know that was a lot, but if you're still here, it's a sign that you're actually built for this. You're dedicated enough to build your future brick by brick. And so you're already ahead of 90% of the people out there. There's no gatekeeping here. And like I said, I have nothing to sell you. I just hope that this information finds its way into the right hands. I can't wait to see what the next generation of entrepreneurs looks like as information like this becomes more available.